Hello guys, so welcome to Swing for Pips. Welcome to another fundamental review. This one is coming from the Federal Reserve of the United States, okay, the FOMC statement. All right, so now I just want to draw your attention to something very basic about this report. I know we technical traders we shy away from reading reports coming out of the central banks of every country that we are trading their currency pair. Okay, so this is actually the highlight of this report. Okay, so I'm just going to highlight the most critical part of this report. Okay, let's come to this place. Say the committee seeks to achieve maximum employment and inflation rate of 2% over the long term. Okay, but now I just wanted to know that what they're actually focusing on right now is the employment data. Okay, they are more concerned about the employment data. Over time, they've been focused for, I think, for like 2, 3 years. What they've been focused on was the inflation report, inflation report, inflation report. But right now, reading from coming from the previous statement they released in April, and now you see that the attention have shifted more to employment data, because they keep talking about talking about the data of employment data that have been coming out, and they've been like, okay, this is what we're actually looking at now to measure the health of the US economy. So going forward, you would be seeing now that NFP reports will be having more impact in terms of creating more volatility, for our technical analysis. Okay, so well, there's still, of course, some impact coming from the inflation data, but right now the Federal Reserve is actually more focused on the employment data that will be coming out. So going further into other news release of the economic data, we'll be seeing more, we'll be seeing more volatility coming from there. Okay, so pay attention to the data, because that's what we're going to use to actually predict, or let me say, give a review of what the US economy is going to look like. Because trust me when I tell you that the economic data that comes out of the US actually have a lot of impact on the GDP. And the GDP right now is not looking too good for the US. Okay, we are below zero. So something just have to happen. If by next quarter the GDP comes out negative again, then we are locked in on a downtrend for the US dollar. So guys, let's pay attention more to the employment data coming out of the US, and then from there we're able to tell what the next GDP report will look like in the third quarter. All right, that's in the third quarter. Of course, in the third quarter we get the GDP of the second quarter. Okay, so let's just look into the horizon and see what economic reports is going to be coming out for the employment data, and of course the GDP going forward. Cheers, guys, and don't forget to swing and chill always. Bye. See you next time.